Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 17th of July 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. Relatively few major movers yesterday on the world's foreign exchanges. I'm just going to highlight a couple of points here, and that is the strength of both the Australian and New Zealand dollar against their US counterpart. The Kiwi pushing back and gaining by 0.8% overnight. The Australian dollar better by 0.19% against the US currency. Dollar index for its part trading at 94.49, largely unchanged over the last 24 hours. Okay then, what's on the calendar? Events that may move the markets today. A pretty compact calendar, but still one with plenty of information for us to take in. First of all, we've already had the Reserve Bank of Australia meeting minutes, and we'll look at those in a bit more detail momentarily. Staying with central banks, we have a speech at 8 AM GMT from the Bank of England Governor Mark Carney. That'll be followed at 8:30 by average earnings and claimant count data out of the UK. And then we jump forward to 13:15 for industrial production and capacity utilisation data out of the US for the month of June. 1400 sees the second of today's central bank speeches. And this is Jerome Powell's testimony to Congress, his semi-annual testimony to Congress and the Senate. 2 days of this, and this of course the first of those days of testimony. Right then, breaking news and comment that's caught my eye. First of all, the Reserve Bank of Australia minutes reveal trade war concerns, and the central bank says it sees no need to raise rates in the near term, and it cited sluggish inflation and high household debt among the reasons to keep Australian interest rates at plus 1.5%. Meanwhile, the Minneapolis Fed President Neil Kashkari has said that the US yield curve indicates that it's time to stop tightening US rates, the latest in a number of market commentaries suggesting that the Fed cycle is approaching the end of rate rises. Meanwhile, the EU and Japan have signed a trade deal that is among the largest deals ever negotiated by the trading bloc, a deal that removes 99% of tariffs between the EU and Japan, says the FT. Right then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? Investors and traders have embraced risk over the last 7 years, data reveals, and pension partners have produced some very interesting research that shows that assets under management in the gold ETF in August 2011 was 77.5 billion, making that the largest gold tracking ETF or largest ETF overall in the world. At the same time, during that period, assets that track the US 500 index totaled $76.5 billion. Fast forward to July 2018, and assets tracking the gold or in the gold ETF 31.7 billion, whilst assets in the US 500 ETF totaled some 266.3 billion, making that comfortably the largest ETF in the world. And you can see the divergence here. The assets fall away in the gold ETF, but the assets tracking the US 500 index continue to climb, and they're rising once more. So a complete change over that 7-year period in investor attitudes towards risk. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange and margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. Thank you for your time.